Yes, top of the moment to you. Anywhere where they watch us from. Today na Tuesday, 27th day in the month of October 2020. And you know what our Tuesday denote. You know what it stand for. What it stand for? Now property matter make person forget sense where as far as property it dey concern. As we take no be only me dey do am. I get ogbonge person wey be saying they certified as far as property sef dey concern. Talking about no one else but engineer Debo. Good morning, sir.
Good morning, Chief.
How you dey, sir?
I did fine. Oh.
Yeah, welcome to the show.
Abi, thank you very much.
Okay, when we dey go the last time, we been promised our viewers say we go start a new topic. We go inform them well on top how person fit use shikini money take participate inside property investment. So I believe say na where they carry us go.
Yes, so now where we did, as we promised, because we know when we discussed the last time about the things people should check out for and things like that, and why real estate is becoming an interesting investment choice now, and why it will continue to be so. We realize that a lot of the things, the major reason, don't let me say a lot, the major reason why a lot of people have not started investing in real estate or will not invest in real estate is because ordinarily it takes a lot of money, okay, to invest in real estate. Usually, once you say you are doing real estate, money don't come. Like Chief now, billionaire. As you get land for Ijedodo, get land for Monkey Village, get land for your, I don't know, you know, na bigs man. Na bigs man in this, so you know.
But you know, say all this land when they sell them, no buy half plot for banana. All this, I have 30 acres in Okibu. If they sell them, you buy one half, you know, buy half plot for banana.
Land different for land. Yeah. That's why I realized that they say there are three most important things: location. Yeah. But you see, what thing happen? We say, if Nigeria don't be your size, as you buy them, when you get am, so you better pass person wey no get anything. Wey still dey say in dey wait till him fit afford banana. Say na banana he wan buy. Whether na you know the banana wey go buy, the one wey dem dey sell for market.
At the end of the day, make you no end up for cassava sef.
Exactly.
You know see banana cassava. Cassava island.
You know, so that's it. So that's what we are discussing today. Now, for people to be aware, and we would just oppose this opportunity vis-a-vis some of the things we've said as to how people should qualify the investment they want to go into to find out whether it's credible, whether it can serve them and all of that. So now it may shock you, but don't let it shock you. Of course, you must have seen around. These ones are very common. The one that they allow you to pay in buying for any property, whether land or house, they allow you to pay for it in installments. Yeah. You've seen
that one. Where.
So that one is good for you if you are the type that you know you earn a particular amount of money, or at least you earn up to a certain amount of money every month. Say every month you know that, say for example, if I know that every month at least 100,000 come to my pocket as salary, and maybe I can live on 70,000. So if I see any opportunity of investment, we then say, if you have to be paying 25,000 or 30,000 or 20,000 every month, and when you pay for certain number of months, you go become your own. You know, say I fit go into that kind of transaction. Even though if the property, they say the price now 1 million, but they say this 1 million, we allow you, may you they pay
we'll spread
20,000 or 30,000 over sometime. Once I know, say, I dey get income 100,000, and at least for now, I feel live on 70. And now increase everybody they pray for. So I go say from that place now, waiting go happen to me be say things go progress. So I go key into that kind of transaction.
If even motivate me to get extra stream of income.
Say, of course, that's what I'm saying. That's what I'm saying. That now increase anybody they wait for, they hope for. So that is that. You know, that's one way. But the one I'm talking about today is even not just that. Is that, look, this is all you have probably to invest in real estate. And you are looking for an opportunity to do that. I'm saying that there are opportunities that as low as 25,000 naira one time, if that is all you have, or multiples of it, so 50,000, 75,000, 100,000, 1 million, 5 million, you know, you can divide 25, you can divide any
Now we are not looking at units of shares you want.
More or less like units, you know. So, but the list is 25, meaning that if I have 25,000, I can actually start to be like a landlord. What do I mean by that? Now, this arrangement is such that you are going to be a part of owning a particular unit of property. So if, for example, there is a 1-bedroom flat somewhere, do you understand? And the 1-bedroom flat, let's say, is going for 20 million. But it's only 25,000 that I have. Maybe that 1-bedroom flat is in Banana Island. If you remember that episode, I was saying that there is how you can still afford in that place.
Yes.
So let's say it is in Banana Island. That the rent they collect in Banana Island is good. You understand? At least it's not that bad. Depending on how it is structured, the rent return can be like 5% or more.
Okay.
Do you understand? Okay. As against in other places where it will be like 3% or less. Do you understand? So what that means is that if I invest in Banana Island, my money will fetch more money than if I invest probably in some other place.
Sure.
So if I take my 25,000 to be part of the owners of that unit of property, wetin go mean be say that's my 25 go mean say what they are looking for now is now 19,975,000.
Sure.
Because they have my 25. They will look for other people that have that. And as they get more and more people, person will do 1 million, person will do 100,000, person will do 5 million. They put all of us together till that 20 million is complete. Now, all of us own that property. You understand? Now, all of us own that property. Now, this is it. This one that I'm talking about is structured such that, or has to be structured such that, at least there is separation of, let's say, powers or control, distribution, decentralization
of power,
of control, because it's important so that one person will not abuse the opportunity. Now, in this situation, there is somebody that is the developer, the one that will build that property, that more or less you can say is the one more or less almost like selling the property.
Okay.
But you see, there is the aggregator, the person that will offer that property to people.
Okay.
You understand? That person would have done due diligence on the developer to be sure that this property that they are talking about, the person has been the eye and the face of everybody to say that, hey, look, this property is okay. Now, in this case, in this particular case, it could be a cooperative that is that aggregator. So the cooperative is discussing with that developer. Do you get? He's saying that, okay, we want to buy this one flat from you, 20 million. They would have done the due diligence, inspect, look at the title and everything is okay. Then the cooperative will take the unit and introduce it to our members and say, members, so if you have minimum of 25,000 naira, there's this property we've seen in Banana Island that you can be a part of. I'm just using all of this as examples. Exactly, that you can invest in. Now, you see, it's difficult to manage a transaction that you have a lot of people that are owners. Yeah. So there has to be a structure around it that must have been created before time. Usually, it's better that they have discovered or they've discussed that, okay, this is how, if you are no longer interested, you own 25 and you are no longer interested, this is how you will get out. This is when you will get out. Okay. Or that this property we are even buying, we want to just hold it for 10 years. We will sell it. Or we want to hold it for 5 years. We will sell it. You understand? So everybody might know that the property will be sold
in 10 years.
And everybody will get out in 5 years or in 10 years. All of those things would have been put in place.
Deeds of agreement.
All of that would have been put in. They will now put all those documents plus the list of the people way by.
Okay.
They will put it in the hands of someone they call a custodian.
Okay.
And the person can serve also as somebody they call a registrar. You understand? Now, that person is the one that will monitor the list of owners and will be corresponding with them. Do you understand? From time to time.
To make sure everybody is on track.
Yes. Even the title of the property
is with the custodian.
They will give it to
the custodian.
Do you understand? They will give it to the custodian. Now, there are two ways the title can be dealt with.
Before we go to the two ways,
Okay.
first question I'd like to ask before we go, I don't want to forget this, sir. The custodian, can he be, which I might find a bit nepotic, but can he be, if he be among the list of people we buy?
Now, the truth of the matter is that anybody can buy. If they are interested, yes, if he be now.
But if he be, he's one of us, and why we can't they give him all the power again to hold?
It's not power to hold. He's not holding it for himself.
He's not
whatever he's holding is not in his name.
Okay.
In fact, he even pays us, and that's why it's actually always better that all of the parties that are supposed to have more responsibility than the other in such transaction, that they actually have stake. It shows trust. It shows that they believe in what they are telling to everybody, that they actually have stake.
They are also financially involved.
Yes, that they are also financially involved. It shows that they have stake there.
They have something to lose. So everybody must be well guarded.
Better.
Well, this is getting interesting. And Property Matta na what they do. We can't discuss things where we say person, investment where we say person if you put money, chicken investment, where we say you no go to gara, and you and me still fee invest. Low budget real estate investment opportunities, now we'll call them. And engineer Debo, you don't take us through how did they take do them. Over to you, sir.
Yeah, so as I did talk, that property, like I said, the person we call registrar, now go maintain the list of the people we own that property. You understand? Go they correspond to them. Now go hold the title in trust for everybody. Don't forget that title may be in the cooperative's name, most likely. Do you understand?
Yeah.
But because it's the cooperative that liaised with the developer, but the title is held in trust by that trustee, so that anybody knows, say, even the cooperative will not just go and do anything with the title without our members. Do you understand what I'm saying? So that is kept intact.
Make you no go take and borrow money.
Yes, then the property you are buying it is a rental income property. The purpose of buying it is so that they can put it out for rent. Abi no be so. Now, because it's a collective body, it may not so be easy. So the usual thing is to appoint a property manager. So there is also a property manager in that mix who will ensure that that property is well managed. They get tenants as at when due. They do everything that a property manager does. Of course, for a token, for a fee, on the property. And they report things to that team, especially the registrar.
That's the custodian.
Yes, especially the registrar, who will distribute. Let's say there is income now, there is rental income. They will pay, and the registrar will distribute to everybody on the list. That
according to their unit.
Yes, according to how much power you get there. If not just 25,000 you get for inside 20 million. If 1 million coming from the property, 1 million came in from 20 million. So you will get your own 25,000 naira share over 20 million of 1 million. Do you understand? Yeah. So that's how it go be.
The next question I would like to ask sharply before we go far is, does this kind of investment, do they have anything to do with SEC, the Security Exchange Commission, or they run them purely as individual things, more like come, or what are the legal bindings? Is it established out of an act of parliament? Do they have anything that have to do with law?
Big English when you don't speak, so good. Yeah. You know that you are replaying exactly some of the things we said as to how to qualify or verify any investment. If you remember, I said that investments like this are either self-regulated or statutorily regulated. Okay. Now, in this case, you will see all the parties that are playing. I've not even finished the parties. They have one form of regulation or the other. Okay. Particularly the cooperative that is bringing people together. Cooperative is regulated. It's not by SEC, but it's regulated by the states. It's a regulated entity. Okay. There are so many ways that these things can be done. This is one way we are talking about. And this is a regulated entity because it's a cooperative that is regulated by the states. Then there is also, they also actually follow almost the thinking or the structure of any, let's say, best practice of such things all over the world, in that power is not concentrated
in one person.
Control is not concentrated in one person. So the developer cannot misbehave. The cooperative cannot misbehave. Do you understand what I'm saying?
The registrar
then the registrar by herself or by himself cannot misbehave. Then the property also will be getting good value because there is an expert. Do you understand?
Which is the property manager.
Exactly, that is in charge and managing the property. Another thing I wanted to tell you is that for this type of investment, they also have what they call a valuer. You understand?
An estate valuer.
Yes, it's also in that mix. The valuer, what the valuer does is that every year, the valuer values that property. Don't forget that they are enjoying rent from that property, but they intend to sell maybe in 5 years, 10 years time. So the valuer values that property every year to have an idea, okay, of the value of the property. If it were to be sold today, open market value, what will it be? The valuer does that every year. So all of these people are part of that mix to be able to ensure that somebody with just 25,000 naira can become a co-landlord.
Let's take David, sir. David, yes. Good morning.
David from Abuja.
Good morning, sir.
How are you doing?
Fine, sir.
David, how is Abuja this morning?
Yeah, Abuja is cool, sir.
Okay.
Go ahead.
Yeah, I'm watching your program and I'm enjoying your program.
Thank you.
So my question is, this investment you are talking about, this low budget real estate investment, how can someone partake in it? Like, where can someone see this kind of opportunity to partake in it, to join? So, and my second question is, what are the risk factors? You know, like, I think there should be risk in this kind of opportunity. Is there any risk factor that one should look forward
Good question.
to? So what are the risk factors?
Good question. Thank you very much, David.
Thank you, David.
How
So please keep watching. How can you partake? I would say that you can. My number will be displayed on the screen, David. I want you can chat me, send me a WhatsApp message immediately after the program. Please give me till much later today to expect response, please. I have some lined up Zoom meetings. So check the WhatsApp number is right there being displayed on the screen. Okay, the last number there under my name. Please check it out and send me a WhatsApp message. I can, arrange that for you. Okay. Link you up with that. Then what are the risks? Of course, there are risks in every and any transaction. So one of the risks, for example, is that you don't get tenants in time. You know that the property, let's say the transaction is for 5 years or for 10 years. You expect that there will be tenant there all through. One tenant may enter today and may leave tomorrow. You understand? And between the time he leaves and the new one, there may be lag. They call it void in the real estate.
We call it vacuum in government.
Okay, we call it void in the real estate world. So there will be void. There may be void, you know. How do you mitigate? For every risk, the most important thing with investment or transactions is that you find out how you can mitigate it. So how do you mitigate such risk of not having tenants, for example? One of the ways to do that is to have the expert on board who manages that property. An expert knows what to do when getting a tenant, you know, the pre-qualified tenant, to be sure that this tenant can pay. This tenant, at least what is foreseeable, they are able to make sure that it is taken care of. Not that they will take a tenant that will pay for 1 year and before you can get
they will now begin
the
court
person
case.
again, court
case.
You understand? So that's why you have a professional on board to limit the risk of that happening. That you can have a tenant that suits
that apartment,
that type of transaction, because you want to have a tenant that can be there for some time.
Yeah.
And then to also ensure that the void period is reduced is why a lot of the properties that are in this kind of something are medium-sized properties.
Okay.
You may not see a 4-bedroom terrace there. That they will say people come and buy 4-bedroom terrace. You may not see. Why? Because it takes a while. If a good tenant leaves a 4-bedroom terrace, before you get another one, usually takes some time. You understand? Unlike 2-bedroom flat.
Sharply,
1-bedroom flat.
Hot cake.
Self-contained.
Hot cake.
Aha, you get what I'm saying? So
Face me, I face you, hottest cake.
That face me, I face you. That one, the gold mine that is in that one. People never tap am.
I want to ask you.
People never
I'm just
tap.
asking you. It might sound funny. Let's take Emmanuel first. Emmanuel, good morning.
Emmanuel from Abuja.
Good morning.
How you doing?
Fine.
Oh yeah, go ahead with your question, Emmanuel. Go ahead with your question.
Okay, sir.
I'm not sure, Emmanuel. Maybe, man.
Okay.
Yeah.
My question is,
Yeah.
say face me, I face you. Say it did for Banana Island.
Face me, I face you.
Say it did for Lekki, all those banana it did.
He did now.
Face me, I face you.
He did now. When you enter, you know that when you enter a
No be
flat.
Agungio.
No, you know that when you enter a flat, one door can face the other. Now face me, I face you.
Okay. No be say yara si woro.
One room.
Okay, now one room here they talk. One of us
One
will
room
go back
can
for one
face the
bedroom.
other.
I think say the one where everybody will go back for one bedroom for backyard.
And swimming pool now.
Wait, some flats get some block of flats get swimming pool. No be say individual house so.
Why not?
Wow, that's good. I know. I've been to the island very well. Don't like me. I know it. Wow. I know. I remember something like that.
Abi?
A property of
a friend.
Yeah. So it's not new.
So as I was saying, so that's that in the mix, you know. So that's one risk, and that's how to mitigate it. Okay.
Void. What you call it?
Yes, you know, we talked about a good tenant, getting a good tenant in, and then we talk about void.
Continuity.
You know, one of the ways to do that is to get a professional property manager, which is there. Then the risk of somebody taking, let's say, for example, if some people have this, and I said, you need to understand what we are talking about today, I would encourage you to go watch our last 2 episodes because it's very important, okay? Now, some will do this type of arrangement, but the title document is still in the hands of the developer. There is an inherent risk in that. You know why? I haven't paid the developer, and you are supposed to be the owner of the property. Because you people are numerous. The developer has not been able to have a way by which he can give all of you. Mm-hmm. Do you understand?
Sorry, sir.
The challenge is that we are getting Abuja.
John, good morning. Good morning, John.
John from Abuja, how are you?
You are on air, John. You are live.
Hello, my name is Jones.
Go ahead with your question. You are welcome, sir.
I'm fine. Good morning.
Good morning, John.
Hello, Dodo. Good
sir.
Morning. Please, I want to ask. Yes, I'm very fine. So I just want to ask this one about this property. Is it available in Abuja?
Well, the one I'm aware of, the Abuja, the units are not available in Abuja. And so that's another thing about investment. Investment, your concern should be about returns.
Not location.
It's not about that. Except you want to buy the property for yourself to stay. Or you have the money to buy the whole property by yourself. Fine. But I mean, if I have 25,000 and I say the property must be in Abuja, it's not about that.
If I go and buy shares now, no matter where the shares
the company can be anywhere in the world.
They will just give me my own dividend.
Exactly. So that's not the issue at all.
It's not
this
the
type of transaction. Exactly.
So what's the cocoa?
The cocoa is returns and security of your investment.
Okay, we'll definitely return.
We'll have to continue.
Yes, we'll return next week because that's the cocoa now. Returns. So our own returning next week will be to continue on low budget investment with Persifid. My name will never change. Chief Olododo.
And Debo Adejano.